Okay, welcome to topic 4. In topic 4, you will learn how to record a general ledger, and we also learn how to record all of the transactions that we've learned so far in the general ledger. So I'll show you what a general ledger looks like by clicking on 4.1. It should show me 4.1. Okay, as you can see on Canvas, it already shows the format of a general ledger. In order to understand how to record a ledger, this is called a ledger account. So I'm going to show you something. Let's just say I have, let's go back to general journal for a while. And we have lots of transactions in general journal. So say a cash sales, for example, cash at bank, debit, GST clearing, credit sales, credit, cost of sales, debit, and then inventory would be credit. And I have other transactions as well down here. All right. Now, imagine that you just want to know what has happened to one account. As you can see in the general journal, for one transaction, it shows you all of the accounts that are affected. In the cash sales, there are 5 accounts involved: cash at bank, which is the clearing, sales, cost of sales, and inventory. But what I want to know now is just what has happened to cash at bank only throughout, maybe hundreds of entries down here. Okay? I don't want to know all of the accounts that are affected. I just want to know what has happened to cash at bank. In order to do that, if I just have general journal, I would have to go and search for cash at bank in every single entry. This is cash at bank, give it a take, and then we keep going down. Cash at bank, take, cash at bank, take, cash at bank, take. So it will take a lot of time for me to know what has happened to just cash at bank by going through hundreds of other entries. So instead, I have a ledger account called cash at bank, and I have all of these other columns like date, cross-reference, and then amounts, and then the same thing on this side. All right. Now, have a look here. Just say I have a sales of $3,000 and 300 here, and both of these are going into cash at bank. Okay, so going back to my question, what has happened to cash at bank? What has happened to it? It's debit 3,300 on cash at bank, meaning what has happened to cash at bank is $3,000 and 300 has gone into cash at bank, and that has to be reflecting accordingly on the ledger account. This is ledger account. This is ledger account that records everything that has happened to one single account. Okay, and in this case, it's cash at bank. Date would be when it happened. Cross-reference would be on the left side. Left side is very similar to general journal. Left would be debit, right would be credit. Same thing here. Left will be debit, right will be credit. And debit means money coming in, credit means money coming out. So in this case, we have $3,000, 300 going into cash at bank, meaning it should be recorded on the debit side. So this is the left side, debit. So $3,000, 300 is going into cash at bank. That's why we have to record correctly. Right, so this one, cash at bank being debited by this much, is exactly the same as cash at bank being debited by this much. The date will be whatever date that you have here. The transaction happens on that date. Cross-reference. So you have the information of $3,300 going into cash at bank. So we have the destination. We also have how much, The only question left, the only information that is missing out is where's it coming from, right? So where's it coming from? Based on these entries, it's coming from the $3,300 is coming from both GST clearing and sales. That's what the cross-reference on the debit side is for. Sales slash GST clearing, 3,300. That's it, right? So what if I have other transaction that also involves cash, such as cash purchase of inventory, right? Inventory would be debit. Let's just say we are buying $700 worth of inventory. GST clearing therefore would be 70, and cash at bank would be 770. These two entries doesn't involve cash, therefore we don't record them onto cash at bank ledger account. However, this one, it does involve cash. So we have to pay attention to it. What has happened to cash at bank? In this case, money, this much, is going out of cash at bank. Meaning this number should be recorded on the credit side of this one. Right? Credit side of this one. 770 on the credit side. Again, date would be whatever date that is. And the cross-reference on the credit side, again, we already have the the source of the money, which is cash at bank. This one is going out of cash at bank, so we already know cash at bank is the source of the money. How much? We already know how much. The only thing left is the destination of that money. Where is this 770 going into? It's going into both inventory and GST clearing. That's it. So immediately, if you have more transactions that involve cash, it will be all listed out here. And just by looking at one ledger account, which is cash at bank here, you can see everything that has happened to cash at bank. All right. And thanks to that, you can also know what the final balance of this particular ledger account is. Say, for example, in total, right at the end of the period, in total, we have $3,000 coming in. Sorry, make it I don't know, make it $7,000 coming in, and we have 5,800 coming out on the credit side. Immediately, you would know that the balance that has left in the cash at bank would be 1,200. Yep, 1,200 on the debit side, because this one has much higher value than this one. So if when they cancel out, you would have more on this side. This is also how we call it foot an account, which I'll re-explain later. But this is how you record a ledger account. You base on the general journal, and you immediately see, for example, cash at bank debit this much. Then on ledger account of cash at bank, you must also have that much on debit. And then you fill in the cross-reference into the, you fill in the other credit entries or debit entries in the cross-reference accordingly. And then fill in the date. Okay, same thing here. Cash at bank, credit. Cash at bank, credit by this much. And then you fill in the cross-reference. Okay, so you stick to the general journal. What happens to cash at bank in the general journal must be happening likewise in the ledger account. Here is $3,300 debit. Here $3,300 on the debit side. Same thing. 770 on credit, 770 on credit side, and then you just simply refill the cross-reference. So follow the same logic. Follow the same logic. So look at here. Just keep looking here. Follow the same logic. How does, based on these transactions, how does the GST clearing ledger account looks like? Okay, we have GST clearing 300 on credit. So likewise, on a ledger account, 300 also must appear on credit. And then the date, and then the cross-reference. When it's on credit, money is going out. So the missing information is going out to where, right? So it's going out to Cash at Bank. So you refill Cash at Bank here. Next question. Sorry, next transaction. GST here, 70 debit. 70 on GST clearing must be on the debit side. Again, the date, and then cross-reference. Money is going into GST clearing from where? And it's coming from Cash at Bank. So Cash at Bank here. Right? So that, and you apply the same logic, the same way of filling in the ledger account to all of the other transactions. So in this particular topic through 4. In this particular topic 4, I don't break it down into sub-chapters, into transactions anymore, because all transactions will follow the same logic. You already learned how to record general journal in topic 3, and I'm assuming that you are very confident with this. So if you are confident with this, you follow the same logic. Whatever happens to one particular account in the general journal, it must be happening the same way in the ledger account. And you just, so if you look at this, $300 on the credit for GST clearing, $300 on the credit for the GST clearing. What's it going into? Going into Cash at Bank, going into Cash at Bank. So these are the same, these two, how can I say, way of recording are recording the same transaction, therefore the information must be the same. The only thing that is different is the formatting of how we are recording the transactions. In this way, by one look, we know exactly in one transaction, we know exactly how many accounts are affected and how, and by how much. But in this way, we focus more on individual accounts. So instead of looking through thousands of entries just to count the number of one account, how many number of times does one account appear, we just have a look at one single ledger account and know, how it is affected throughout the course, throughout the accounting period. Okay, so that's it.